Absolutely. There's always,
Yeah,
challenges. The important thing
that's
is you
right.
overcome them and you work your way through it.
Absolutely.
And the good news is we're here today and we're live. Good afternoon, ladies and gentlemen. Nathan Logan here with the Gold Bar Nathan team. I'm live here with Kai Lu from Pulsar uh, Enterprises. Where today we're here bringing you an episode of conversations more so on recession and real estate. Should you buy or should you wait? Capitalizing on the market at times when opportunities present and being able to take advantage of what's out there for you and being able to write it out. With that being
Absolutely. It's
said,
a very, yeah.
go
Sorry,
ahead.
go ahead.
No, go ahead,
It's a
Kai.
very interesting time right now.
Absolutely. Lots of changes, lots of uncertainties, volatility in the market. So we basically figured we'll chat here today on strategies, on should you buy now or wait, investment strategies to consider during a recession, finding and capitalizing on opportunities, mortgage financing and strategies during a recession, and things like that. And with Kailu's expertise, we hope to be able to answer some questions for you guys and, open up in conversations. And then if there's any further conversations and questions to be had, we'll be more than happy to take it offline and have a one-on-one conversations with anybody here. Once again, thanks for joining in today. So with that being said, Kai, I will open up the floor to you.
Absolutely. Thank you very much, Nathan. So, folks, I don't know if it's safe to say we're heading toward a recession, but definitely we're experiencing a prolonged economic downturn. If you go to any grocery store, you go to any gas stations, you will see prices really have gone up quite a bit. Real estate, it's in a very uncertain time right now. Valuation is changing dramatically. Mortgage financing has gone up quite a bit as well, and also a lot of people are not able to close the properties they want to buy, and the sellers are not really selling, so on and so forth. So that exactly presents opportunities for investors because I work with a lot of investors and I'm finding them still very busy. So in today's session, I want to take some time to share what they're doing. So if you are not quite there yet, you can leverage what they have learned to better yourself. And so that's exactly what I'm going to do here today with Nathan. So Nathan, you're a realtor. So how about we start a conversation by you telling people what you are seeing on the market? Now, is this a good time for people to buy, or it's a good time for people just to wait? What do you think?
Absolutely, absolutely. So there are lots of opportunities. There are a lot more deals to be had now in the market than there ever was in the last 6, 7, 8 months, a year, 2 years. With how things have unfolded over the last couple of years, um, we've started seeing a downward trend, as most of you have noticed. With that being said, the days on markets have started increasing. So inventory is sitting in the market for longer than we want. We're seeing uh, less offers on some offer days. Don't get me wrong, there are offer days for some properties with 20, 30 offers. And what's happening in that situation is the sellers are listing at a much lower price point than they did 3 or 4 months ago. So now instead of listing something at 1.2 mil, they'll list it for 800 and still get about 1.1 versus back 6, 7 months ago, they would list at 1.2, 1.3 and get into the 1.4, 1.5 range with a lot more competition. So, with that being said, to answer your question, Kai, there's lots of opportunities, lots of properties out there just kind of lingering in the market. For
Right.
example, there was a property that sold for 815 in February. Their neighbor just sold for 550, right? And that's exactly what's going on lately.
Is that the property in London? Because I know it's one of your core areas. Is that the
That's
one you told me
correct.
about?
Yep. Yep. So
Yeah,
that's the one
the
in
one in
London.
London.
There's stuff in Durham region. There's stuff in GTA. There's one in Scarborough actually that sold for 1.05 last week, which would have
Right.
literally sold for like 1.3 plus,
Wow.
a few months ago, not too long ago. So now, with that being said, seller expectations have also got to align with market conditions. And
Right.
when seller expectations are not in alignment, that's where the days on market tends to creep up, and eventually they start getting in. They start realizing what's happening out there, and they've got to come down if they've got to sell. So, speaking of that, if you're a seller that's got to absolutely sell, you will definitely adjust to market conditions and come to terms with yourself on what can and what cannot happen for you and with your property. Versus if you're a seller who did not have to sell, you will just ride out the market, sit there and wait and just continue with it. And then there's those that will sell based on panic, right? So rates, oh my gosh, rates are going up again. Rates are going up again, and we've got three more rate hikes, and I'm sure you'll touch on that, Kai. With
Yeah.
that being said, every time there's rate hikes, prices come down. They work, in tandem with, with what's going on out there with the Bank of Canada and stuff like that, right? So the
Right.
panic sellers will start, making moves, and then what happens is that's an opportunity for an investor to get in and say, hey, you know what? Here's a great opportunity I got. Hold on to it for a long term, couple of years, turn it around, and now I've capitalized on an opportunity I wouldn't have otherwise.
Absolutely. Rates will go up again, very likely, because central banks not here, not only here in Canada, but also in the States and also in other countries, are all facing the same problem. They really have a dilemma. They have to control inflation and also at the same time still grow their economy, but they can only prioritize one. So taking the central bank here in Canada, for example, they really are prioritizing controlling the inflation, which is sitting at 9% right now, which is very hard, actually very hard to believe. But they really have to keep the interest rate as high as possible to limit the demand. So people think, oh, everything's going to be so expensive to finance. Things are getting more and more expensive. They will consume less so that they can lower the demand and lower the inflation. But at the same time, we still have to get the economy going and to grow it as well. So eventually, interest rates will come down. And if you think about the prices of these houses you were saying a few months back, they were selling for 1.3, now only selling for 1.05. That is really a good opportunity for people to come in and to get these assets under their belt and to carry them for as long as you can, because the value of real estate is really in the long term.
Absolutely. So long-term buy and holds again makes the most sense. Obviously, time in market versus timing in the market is a much better strategy, and it's a sure way to win rather than trying to time the market, which has worked for some. However, it doesn't always work. So versus rather than being an investment strategy and a business model, it becomes more of a gamble when we try and time the market, and we may get lucky today, but it doesn't always happen.
Absolutely, and this is directly related to the second topic we want to talk about, because I also work with some flippers. I'm sure you do too, Nathan.
Yeah,
So flipping, it's a very market sensitive activity. It is a great investment strategy if you know how to do it and you are on the market, you know the market, so that can be a great investment strategy. However, with days on the market getting longer and longer, and also selling prices are dropping every day, so flipping might not be such a good strategy for you to use right now. And that is a investment strategy I would not recommend at this current market condition, because once again, when the days on the market gets longer and longer, so will carrying cost be. And when your asset value really drops, it's gonna diminish your profits.
absolutely. And it's a falling knife right now with every rate hike, prices have been coming down. So again, to touch base on should you buy now or wait, yeah, you definitely want to consider what you buy and when you buy, and strategize on what's out there in terms of an opportunity and capitalize on it when it's there. And you need to also know when to walk away from a deal if it's a bad deal. You're getting into a flip
Absolutely.
and you're getting into high acquisition costs, and you do your rent a budget and things like that, and you calculate your after repair values and your spread and stuff, and if you're not getting into it at the right price point, you're definitely putting yourself out there in a risky position. And like Kai mentioned, getting into a flip right now is a very very
Not an
risky
ideal
business.
situation.
Yeah,
It
yeah,
is.
absolutely.
Yeah.
Unless if you're finding these deals at drastically discounted price points, which there are opportunities out there. It's hard to find, but when we do find them, it makes sense. We get into them absolutely, And
Absolutely.
for example, I was looking at a deal this morning. It says ARV of 400,000, and they're trying to off market through another investor. They're trying to liquidate it for $325,000, and your rental budget is 50,000. Now, where's the spread? Right. So as an investor, you need to
Yeah,
be able to understand where that is. And then obviously not to mention holding costs, cost of acquisition, and then cost of disposition as well. So when you purchase a property, you got land transfer tax, you got
absolutely.
lawyer fees, you got appraisal fees. And if you do an inspection, then you got inspection fees. And then obviously holding it, you got property taxes, you got utilities. And then also as a flip, a lot of folks don't realize insurance costs are much higher than a regular purchase or a buy and hold for a rental property. So you got to consider into that. A flip insurance is like $400 and up versus, a buy and hold is anywhere from $100 to 200, $250, depending on the type of property for single families and smaller duplexes and stuff. But again, if you get into, much larger multifamilies, the scope is different and things change. Just looking at, from a basic, entry level standpoint and smaller single families, smaller multifamilies, you're looking at a couple $100, which makes a big difference. So the holding cost on that goes up. Utilities adds up. Scheduling contractors is another thing, and the buy and hold, and then wait for contractors to come in and take care of your projects. And
Right.
then now you got to factor disposition, right? So cost of sale, commissions, lawyer fees, and things like that, stagings, all that stuff adds up. So where's that spread? So it's important to know where you're able to, how well you're able to analyze a deal and, take on opportunities you want and walk away from the rest.
Absolutely. That's these are very good insights. And also in terms of acquisition costs here in Ontario, you really have to consider the land transfer tax as well because they are very expensive. Particularly if you buy in Toronto where there's double tax, your acquisition cost will even go higher.
Right.
Yeah.
Yeah. And then,
So what
and then mortgage financing, obviously, right? And then rates going up and stuff.
rates going up and also so are the stress test rates, meaning with the same amount of income, it's with the same amount of income you're going to qualify for less now. So people think I can always get 80% loan to value. That's no longer going to be the case. And also you got to really be careful with the offer price. For example, if you get an appraisal saying the property is only worth 1 million and your offer was 1.5 million, then the lender will not finance the premium, the 500,000. They are going to go 80% of the 1 million, leaving you a huge chunk of equity you have to contribute on the closing date.
Right. And we also touched base and we spoke offline earlier about appraisal values not coming in and people having a hard time these days as well.
Absolutely. So these are the things you have to actively manage. If you are working with the broker, getting in the appraisal is something I would recommend you to do because there has been a trend recently. Appraisal values are really coming down unless you are finding a good deal. I mean, the price is really under the market, then you don't have to be too concerned. But if you are just buying a regular house from, let's say, from MLS, very likely if it's in good condition, turnkey condition, likely if you purchased the mid offer back in COVID time, probably 4 3 6 months ago, then very likely the price you're gonna get from the appraisal is gonna be less than what you offered. So guys, you really need to be careful and manage these proactively.
Gotcha. Gotcha.
Yeah.
Do you have any tips from a mortgage perspective on what to look for now? There's lots of questions out there in regards to should I go fixed? Should I stay variable? And obviously with variable, there's, different models as well. Any tips, any suggestions?
So should you go with a variable or should you go with a fixed? That's a very good question. It really depends on what your risk tolerance and how your next 1 to 2 years will look like. If you would prefer something really stable and the payments stay exactly the same, then I would recommend you a fixed rate. However, fixed rates are more expensive than variable rates. Variable rates right now, as of right now, prime rate is at 4.7. Living the variable rates pretty expensive. However, I'm a strong believer that rates will eventually come down back to what we discussed earlier because the central banks will eventually lower the interest rates to stimulate the economy. We can really just run on 4.7% forever. Eventually, it has to be cheap enough for businesses to borrow, for regular folks to borrow, so that everybody can make money and grow the economy. So if you are a long-term player, and you don't mind the interest rates going a little bit higher or a little bit lower, you have that capacity to endure these, then I think a variable rate is still the way to go.
Gotcha. Gotcha.
Yeah,
Wonderful. That's much helpful.
right. And also, we were talking about investment strategies. It really depend. It also really depends on what kind of investment you are making. If you are making residential investments, then I think any market can still be pretty good for you to consider. Windsor, even Windsor, London, Woodstock, Hamilton. I think these are still pretty strong areas because we have a pretty good fundamentals there. The demand is still strong. Economy is growing. Population is growing more importantly, so driving up the demand. However, if you are investing in commercial real estate, I would really encourage you to take a look at the strategy. It's called a flight to safety or flight to quality, which basically means investors exit these secondary or tertiary markets and get back to these core areas. The reason being, once you're in a smaller market, your tenants, remember, your tenants are business owners and businesses. So if the economy goes down, very likely they're going to have a less revenue. So they will not, they will either reduce their footprint, rent less space from you, or they will simply not renew the lease at all. So your vacancy will go up. So once your vacancy go up, your revenue will also go less actually, because you now have a don't have a tenant, or your tenant pays less. So when the economy goes down and the secondary markets, also tertiary markets, will be the first ones to be affected, but the core markets will remain strong, particularly here in GTA. So if you are investing in commercial real estate, I would highly recommend you to start thinking about getting back to these core markets. Although here in GTA, the loan to value gonna get pretty low because it's all based on the net operating income. However, commercial real estate does tend to give you a pretty strong upper hand on inflation hedge because it's tied to consumer price index, and unlike residential leases, you can actually kick out the tenants, increase rent with your commercial tenants.
Right. Much of a safety net.
But yeah, I would say so.
Yeah, absolutely.
Yeah,
It's interesting you mentioned, secondary markets and, tracking carefully in those regions. There's a lot of investors from here in the GTA and Southern Ontario, especially focused on the Northern Ontario markets like Thunder Bay and Sault Ste. Marie and Timmins and all
right,
those areas. And obviously, you
right,
touched base on another point where, as as with the recession, with things taking a standstill, tenants will have a hard time paying, and obviously will catch up there. And then now you're stuck in a market where the appreciation values aren't as greater as the GTA is. So,
right,
and you made another great point about pulling out of those markets and focusing more again into the GTA markets, because a few months ago, a year ago, the investment deals weren't making much sense from a cash flow perspective here in the GTA. So a lot of
right,
investors started exploring uh, distant opportunities, whether it be, Northern Ontario out of province, into, different markets where even tenant laws are a little more favorable towards landlords like Saskatoon and stuff like that. And
right.
the US market. So again, the GTA market obviously is a lot more reliable and, a lot more stable, and, it will rebound much quicker, like you mentioned, and I guess that's a great point you made there.
Yeah, because of the supply and demand. The population keeps growing here in GTA, therefore the demand will always be strong.
Yes.
And the businesses too. If you look at Amazon, they really, well, I shouldn't say they really made, but the industrial assets have been in huge demand because of these last mile warehouse demands.
Mhm.
So things like that are factors for you to consider. Core markets, it's expensive to get in. However, they do tend to perform pretty strongly during
Absolutely,
recessions. Yeah.
absolutely. A lot more population, again, supply and demand, right? And it's a no brainer. I'd
Yes,
imagine.
that's right.
Yeah, yeah. With that
Yes.
being said, we're approaching the 12:30 mark. I know most folks probably are on lunch and breaks and stuff. And should we wrap it up and leave our contacts here? And for those of you that stayed throughout the session here, we'll share a link. And can we post a link here? Is that possible? And
Let me see here.
excuse us here. We're just getting used to a new platform here, so bear with us while we get through this technical learning curves, rather. And
Absolutely.
again, Kai's
And
contact info is right here on the screen he shared. And so is mine. So if anybody has any questions, feel free to reach out to either Kai or myself or both of us. We can always hop on a conference call together or a Zoom session together. Or you can email us, in conjunction to info@nathanteam.com and Kai at pulsarent.com, or give us a call. I believe that chat just came to myself.
right. So this one it says it's a private chat, so I'm not sure if it's just between you and me or the audience
That's
can
fine.
see it.
What we can do is we can post the links into our
Social
social media
medias.
and stuff, and
Absolutely.
we have a list of the participants anyway, so we can have a look through there.
Absolutely, and I highly encourage you to leave some comments on this on the topics we discussed because different people have different opinions, and we would love to hear from you and also what you are thinking about the market, what kind of strategy you're thinking, so on and so forth. So leave your comments and let us know. We would love to hear back from you. And once again, once you participate, you have a chance to win Amazon gift cards, movie tickets, indoor and outdoor. So participate, become a better investor, become a more sophisticated investor, and have some fun.
Absolutely, and it's always nice to hear from folks, and have those conversations. And obviously, everyone's learning every day, and we probably learn strategies from some of our skilled investors as well. So it'll be definitely nice to have those conversations, and keep it open ended communication channel.
Absolutely.
But
So
with
that
that
being
being
said,
said,
Nathan,
yeah,
yeah, thank you
absolutely, I was
for.
going to say the same thing. Thanks so much, Kai.
Sure, go
Appreciate
ahead.
you coming in. Good seeing you again, and we'll be in touch.
Absolutely. Thank you very much, everyone. See you
Have a good
soon.
one, everyone. Cheers. Bye.